right, thanks for joining us for another edition of the Tech Corner. I'm George Tsilis, Senior Markets Contributor here with the Schwab Network. And this week we're going to be highlighting semiconductor giant Advanced Micro Devices. Now, AMD is a legacy global semiconductor company that designs and produces a wide array of semiconductor products, including microprocessors, graphics processing units called GPUs, as well as AI accelerators. These products are marketed under various brands called AMD Ryzen, EPYC, and Radeon. Now, the company operates under four primary segments. It's data center, client, services, gaming, as well as embedded systems. Now, the data center segment provides high-performance computing solutions with products like EPYC server processors, Instinct AI accelerators, catering to hyperscale data centers and cloud service providers. The client segment includes CPUs for desktops and notebooks, focusing on computing performance. Now, the gaming segment delivers discrete GPUs and semi-custom system-on-a-chip products for gaming consoles, including partnerships with Sony and Microsoft for the gaming consoles. AMD's embedded segment serves diverse industries, providing CPUs, GPUs, and what are called field programmable gate array technologies for automotive, industrial, and healthcare applications. Now, AMD competes primarily in the semiconductor industry with mainstay competitors in the CPU markets like Intel Incorporated, Nvidia in the GPU markets, and ARM Holdings, as well as Qualcomm in mobile chipset technologies and custom silicon solutions. Now, when it comes to AMD's unique value proposition, it lies in its comprehensive product portfolio that spans CPUs, GPUs, and AI accelerators that cater to diverse segments like gaming, data center, and embedded systems. The company's strategic acquisitions, such as acquiring Xilinx in 2022, brings together complementary product offerings, including field programmable gate array technologies, alongside its CPU and GPUs. This increases AMD's total addressable market in industrial automation, manufacturing, edge computing, as well as the automotive markets. Now, in recent news, the company posted earnings and sales results for Q1, where it denoted total revenue grew 36% year over year to $7.44 billion. And on a non-GAAP basis, the company earned 96 cents, beating the estimates by 3 cents. That was an actual increase of 54% year over year. A few things to highlight in the report include data center revenue, which grew 57% year over year to $3.7 billion on strong CPU and GPU demand. The client segment also grew by 68%. However, the gaming segment, which is now a smaller portion of their total revenue, declined by 30%. The company also denoted that it expects its MI350 technology, its primary artificial intelligence chipset, to increase in the back half of 2025. Also earlier this week, AMD denoted a partnership with the Saudi Arabian Humane Alliance, which is a technology consortium where they'll be investing $10 billion over the next 5 years to deploy 500 megawatts of AI computing technology. Now, also this week, from a shareholder-friendly standpoint, the company announced a new $6 billion share buyback program. This is on top of the already authorized $4 billion share buyback in place. Now, there are a lot of positive things to consider with AMD. First off, it demonstrates exceptional growth with Q1 EPS year over year of around 54%. This robust growth trajectory underscores the successful expansion and increasing financial performance of the company. AMD's strong growth in the data center segment, driven by demand for server processors and GPUs, highlights its increasing role in AI infrastructure. The company is well positioned with its upcoming MI350 and 400 GPU launches and strategic acquisitions like ZT Systems and System Server and Cloud Software, which are expected to lift AMD's valuation. Most analysts remain optimistic about AMD's CPU market share gains against Intel, alongside favorable trends in AI-driven growth opportunities. AMD shows strong profitability with a net income of around 8%, which is more than double the sector average of 4%. This indicates AMD's efficiency in converting revenues into profits. Now, there are also some concerns we have to consider here. While AMD posts impressive trailing growth and profitability, its high valuation and weak price momentum have weighed on its overall performance. When we take valuation into consideration, the forward earnings multiple at around 29.44 is significantly higher than the sector median of over 22. AMD may face meaningful challenges from U.S.-China export controls, which could result in an up to $1.5 billion revenue hit in 2025, impacting its financial performance. Despite strong AI infrastructure spending, AMD continues to struggle against the technological prowess of Nvidia. With declining forward EBITDA estimates highlighting its competitive weakness, when we take into consideration EBITDA growth estimates for the next 4 quarters of around 20.5%, This is significantly lower than the 5-year average of 39.6%. AMD's revenues are also highly cyclical and tend to move with the broader semiconductor market. There are industry-specific factors such as average selling price and sales mix we need to consider that have also caused variability in annual sales results. The company's reliance on Taiwan Semiconductor for chip manufacturing poses supply chain risks and geopolitical uncertainties, potentially affecting AMD's growth prospects. Other risks we need to consider include PC segment competition from Intel, excess computing capacity, delay AI monetization, and macro weakness. Looking at a 3-year weekly price chart, we can actually see that the stock is down roughly 47% from the March 2024 highs, reflecting weakness in core computing CPU microprocessor end markets. Since the weekly price remains constrained below the 200-week moving average, we can deduce from this that the long-term trend remains bearish. However, the weekly RSI indicator came off April lows below 30 and is rising, which suggests improving price action. Looking at the 1-year and year-to-date percent comparison charts of the S&P 500, the stock has underperformed the benchmark in both timeframes. However, the intermediate-term daily trend is improving, yet the daily price action remains below the 200-day moving average, which suggests the stock has not yet proven to be in an intermediate bullish uptrend. Now, in summary, the microprocessor market is a critical part of the semiconductor industry and is dominated primarily by 2 companies, Intel and AMD. AMD now accounts for less than 20% of the core CPU market and has made many changes over the years to build a sustainable, diverse business model, investing in GPU technologies and field programmable modules. The company emphasizes innovation through adaptive computing and high-performance product portfolios, aiming to lead in AI technology across cloud, edge computing, and end devices. Partnerships with hyperscale cloud providers may provide further strength in its competitive edge, allowing it to address evolving future demands of AI and high-performance computing markets. Now, next week on the Tech Corner, we will highlight Amazon. While it's considered to be a consumer discretionary name, its Amazon Web Services business is among the largest cloud technology players in the current market, and its AI partnerships place it among the cutting-edge technology shaping today's markets. Thanks for joining us this week on the Tech Corner. Please like and subscribe to the Schwab Network. I'm George Tsilis. We'll see you next week.